Hey traders, what's going on? Jamie Setley here with SB Trade Desk. It's been a while since we talked. Frankly, not a whole lot going on in the FX world right now. Euro has been at about 112.20 for, I don't know, my entire life, it seems like. But I hope everyone's doing well. And let's get started. We've got some other interesting things to look at, I think, including indices right now. So, Pooja, what's going on? How are you? Yes, thank you for letting me know that the link was the wrong link. So you let me know and I got it fixed. So thank you very much. We will take a very quick look. We're not going to spend a whole lot of time on this, folks, because dollar index, I mean, look, like you know what the chart looks like, okay? We've been going over this for pretty much a year. This is actually last August. So right here, this high last August, that's when we kind of started talking about the dollar, excuse me, the dollar topping out. And it's literally the same exact spot we're at right now. So after all of this, again, nearly an entire year, 12 months, and literally gone nowhere. So look, I've been doing this trading FX for 15 years. I've never seen anything like this in my, so, I thought 2014 was bad. It seems so much worse. I guess it always seems worse when you're in it, with the volatility just being nil. But we do have a possible bearish fork here, right? Looking at this, we're starting a fork from the November 2018 high, and we do have a touch on the center line, right? And then the last couple of highs have been on more or less the same plane. So take a parallel of this from the June 18th high, and it's pretty close to resistance from July 9th. So, if we start to trade within this and break down, God forbid, the market actually moves, then we will, maybe have something to work with. Yeah, I don't know. But this is kind of what I'm looking at the moment. But again, not going to spend too much time here because it is just dead, right? And same goes, of course, for euro dollar. Again, just the opposite of DXY, and we still have this count, still have a low in possibly, right? And we're looking at actually a little bit different of a fork here. We've got this from the March low, right? So we are still sitting on this for the most part, okay? Yesterday's low as well was right on this parallel top side of this trend line that goes back to September of last year. So again, possible that old resistance did become support here over the last couple of weeks, and just kind of waiting for a resolution, okay? All right. Dollar yen is one of the more interesting majors at the moment. So we've got the channel here back to the high from October of last year, and hold on here. That red parallel, I make it red because it was resistance. That was support for so long, and then resistance essentially since mid-June, okay? Except for this little push right through here early in July, we've continued to trade off of this level. So had a little bounce this morning from a square root level 107.62. Resistance up here about 108.10 or so. Maybe we tagged it this morning and that was it, right, at 108.02. And we are looking lower here in dollar yen. I'm finding it very difficult to put orders on here just because literally the market is so quiet, nothing's happening. And it's just difficult to trade a market that doesn't move very much. I mean, we're down 10 pips. So we're looking down towards 107.30 near term. Bigger picture, I think this is the far more interesting chart. Not that. Hold on here. So this one right here, right? I had it was much cleaner before when I had it in the post the other day. So let me clean it up. But this could be super bearish, right? Now, that's not to say that we can't continue to do this back and forth, back and forth, back and forth, but this to me is super bearish. Beautiful trend line, and look how precise the resistance has been, right? It was perfect resistance back on the 11th of June and perfect resistance back here on July 10th, okay? So again, with this, all we're basically saying is that we broke the consolidation that's been going on since 2016, and risk is a lot lower. Okay, I mean, viewed in this context, remember on the long-term page, we're talking about this being an A and then a big B, excuse me, a big B wave, and then we have entered wave C, which means we're heading down to like the mid 90s. So might sound crazy, but that's my view at the moment. So we'll see, but that's what I'm thinking as far as dollar yen's concerned. All right, moving on to British pound. We did hit a really good level. I had this chart in last night's post, and we are following through on yesterday's reversal, but it's simply your channel back to the March high, okay? So draw your trend line, right? Extend your parallel, low, 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 not quite, low, low. So you got 1, 2, 3, 4, 5, 6 different days that touch that parallel and extremely well defined. If I look way back to the 2016 low, I don't know, possible that you've got an impulse up and then A, B, C down. I've got the long-term chart in here, which, you know, I haven't changed the long-term page in a long time because there's really been no reason to. But if I bring up the long-term page for context, right? 3 waves, 3 waves, 3 waves, all since the 70s. So, you know, maybe coming back for a little double bottom retest type of action here, but it all fits perfectly in a channel as well. So constructive cable here, okay? British pound, this is the daily chart. Futures, hold on. All right. Okay. Commodity currencies actually are ones that have been on the move lately. Kind of annoyed with this because we had this like lined up perfectly to nail support down here last week. I was traveling on vacation, so I was not. No, I was only. I was not around during the day, but did leave out some orders. Missed a couple, hit a couple. As far as New Zealand dollars concerned here, I do want to step back and take and show you this. So, all right. going to get rid of everything, and we are going to go to a daily chart. All right, so here's the daily. Yearly open, right? Magenta line. I think this kind of highlights the like what's going on here, in the sense that that year open was basically big support for a long time, right? Up until April, we crashed through it. We came up to it. It was resistance, right? Very early in the month. We've had an intra-month reversal. So we've, failed or early in the month, dropped hard, and now we're back above it. So this is very bullish price action, higher highs, higher lows. Again, I do think this is 1, 2, 3, 4, 5 up, A, B, C. I think you're in a third wave higher, all right? Now, we might find a little bit of a pause here. So I wanted to show you the channel from the lows, all right? What I find more interesting, though, is this. If things are really bullish, then we could be trading on something like this for a long time, because look, this ends up being the trend line, right? Essentially from right there. So that's what I have drawn on the chart. The one I've been showing. I've got, that's what these lines are right here, right? So you know where that comes from. Now, near term, we are following essentially this short-term channel. So as I speak, we're actually getting pretty close to a spot right here where we might pull back a little bit, 67.60 or so. If we did, you'd want to see support probably around 67.20 to 67.30, okay? So bullish Kiwi, the question is, where do we throw in an order, okay? I think, again, you're just looking at month open, year open here, 67.20, 67.30. Look to take it higher. All right. Aussie is coming up on an important level right now as well. Fork we followed for a long time. We did get that low over here with the J spike reversal, if you recall, on 618. And guess where we are? Just about at the yearly opening price. So here we are, July 18th, and Aussie, if you went into a coma on January 1st and woke up, you would think that nothing happened. So we're just about there. Again, 70.54 is that yearly opening price. Also have the parallel. It's been pretty decent resistance, especially since December of last year, okay? So right here, 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 and the year open. So beware of maybe a little bit of a pullback or just a pause potentially, but this to me is a really bullish looking pattern. So again, it's a head and shoulders pattern with a very high right shoulder and an upward sloping neckline. That's a very powerful pattern. Did have an order to buy it right here. This is the chart from last night. Doesn't look like that's going to happen because we have continued higher right after the Aussie jobs data. But we will, continue to focus essentially on this fork here, all right? It might actually be better. Hold on here. Might be better to follow this. Let's get rid of this one. I do find a little better when you're drawing channels, forks, etc. I find it better, more useful to have the actual channel like off the low in here rather than a fork. Of course, you can't always do that, but if you can, I feel like it's usually a better structure. All right. So if we draw that in, then what we've got here would be something to watch for moving forward, all right? Weekly opening right here, 70.20. Month or yearly opening 70.54. So those are the two levels maybe for the rest of the week, and it's already Thursday, so that I'd watch. 70.54, 70.23. Okay, it's also going to be this high right here. Sometimes things get a little clearer when I sit here and talk it through out loud to you guys. Yeah, so that's a pretty clean looking chart, really. I mean, that high right there is the center line. You come back, tag it, try to go higher. And finally, with FX, we're looking at dollar CAD. We've been consolidating for a while above the well-defined 29.70, right? So that's your trend line from 2017, okay? The channel is a thing of beauty. Channel here, channel hit the top in late December, looking at 3 waves down. And at this point, we'll really have to consider, well, we'll have to see what happens there, but at that point, you might actually be getting pretty bullish. Getting pretty bullish dollar CAD, okay? This is a huge spot. You're talking 2 legs down, you're talking lower channel confluence, and so that's the corrective channel down here, right off of this level here from these highs, and of course the trend line from 2017. So, really just waiting for that essentially. Now, near term, go to a 4-hour chart. Near term, I'm thinking that everything probably from here, so what is that, 7-4, so everything from July 4th might be a triangle. Right, reason I say that is this is a 1-2, probably a 3 into here, right? The big 1, 2, 3, 4, 5 extended first wave, which is rare, but whatever. And then thinking this is your 4, okay? So if we do a 38.2 of this, 31.90, which is where we were thinking for resistance anyway. So it might be more of a flat, get an A, B, trade all the way up here and C. I don't know, we'll see. My big thing here though is that just be aware of 29.70. That's the big spot, like huge spot. If we can trade up to 31.80 at some point, then it's probably a short. I know it's tempting to want to try to get long for this because you are talking 100 pips from here. I would just need a little more evidence, frankly, before I'd want to be buying, because this is still just, everything in here is corrective to me, right? This is a 3 down, like from here. So it makes sense that this could be a triangle, A, B, C. If this is a triangle, then we do not go through 31.50. Instead, we probably fail somewhere around 31.20, and then you turn over. So we shall see, but don't worry too much about the nitty-gritty short-term stuff on dollar CAD. Just know that the big level is just below at 29.70. Okay. All right, let's move on to some other stuff. We got obviously plenty of other markets moving, notably the metals. So gold and silver, of course, are moving big time. I'm looking towards that 15.25 area or so, which is just the upper parallel of the channel from 2016. It is also the base essentially from 2011, right? That was old support. So that's where I'm looking initially. We looked at this chart a couple days ago. And funny enough, for all the the big moves that we're seeing in gold names, like gold stocks and silver, of course, breaking through to the top side. Gold's actually still below the 625 high, which is kind of weird. Irrespective of short-term stuff, we are looking higher in gold, okay? Hmm. Pooja says, have you taken a look at DSI on gold recently? I don't think it was super high recently. Like I know over here on the 25th, we were like in the 90s. It was the highest since 2011. And then we did sell off a little bit, but it wasn't much. Let's see, gold DSI is 85 right now. So it's not crazy. It's not that bad. I mean, 85, look, like you're not going to sustain a rally with 85, okay? So, subjectively, yes, I'd kind of like to see us go back and forth, back and fill a little bit for, a couple more days. It would be great. Maybe even get a sharp drop within the range, and that would set things up, I think, for a much bigger move to the upside to get to that 15, 20, area. And do be aware of that too, of the, once we start to DSI is 85, if we break out to new highs, you're not going to sustain that. You're probably going to pull back again. And look back to like 2016, be aware of stuff like this. So I remember back in 2016, you had a triangle as well. Remember this triangle here from February? We broke out, but then we came back into it, right? And essentially what you ended up with was consolidation that took from February to June, right? And then we went into the highs. So, be aware of kind of pullbacks after breakouts with where we are in the gold rally, given the fact that DSI is 85. All right, silver. Had this chart up the other day. Silver's into the 200-week average, which is kind of important, right? By no means would I say that this was precise resistance at all over the last couple of years, but it's a reference point. It's something to be aware of, and you're also on these old highs. So you got the highs right here from January. As far as silver is concerned, this is a chart from the other day. We're bullish until at least 1666 near term, and then we'll see what happens. I would bet that you try to pull back from there. Again, that's a great trend line, right? Back to the July 2016 high, right? Tags the June 2018 high, and resistance back in February of this year. So, 3 precise touch points. From here to there, what do? Let's take a look at a short-term volume chart and see if we have anything of note. So I can already tell this is probably a short-term channel right here, isn't it? This is going to be a mess if I draw this on here. Hold on. All right, hold on. I'm going to draw in one more channel on here. Don't get upset with me. All right, so silver is doing the slingshot thingy, right? Breakout, came back, tagged it, essentially during Europe this morning, and then moved higher. So something to watch going forward over the next couple of days really is maybe the rest of this month, actually. Silver, continue higher. When you pull back, watch for support on the top side of this channel line, okay? So still plenty of upside in the metals. Near term, just, buy pullbacks if you get them. All right, let's go to the indices. All right, so pretty bearish here. These are a lot of the charts that you guys have seen lately, right? This is the, hold on one sec. All right. So here's the long-term chart, or since 2009, I guess that is long-term, 10 years of the S&P. And sometimes it's this simple, folks, like draw a line over the highs. So hit the level, we're rolling over. Also, I just took a glance here. I just noticed that the put-call ratio is actually pretty low. It's 0.9. So that tells me that we still have downside to go here. And we're nowhere near like any sort of even short-term fear gauge, right? Again, I pay attention to this closely because when you get the spikes, right, and put call, that's when you tend to get short-term lows. So the fact that we're only 0.89 is a really good sign from a bearish perspective. And the Qs, love that line, how that came into play, turning over perfectly. Again, this could be the top. Right, channel, extend one time, extend two times, right on those highs, making a nice weekly reversal this week as well. So, all right, the short-term stuff, which is something you were probably interested in. Oops, where do we go? Here we are. So the S&P, this is the chart from 2 posts ago. The S&P has started to break down, right? We did that yesterday. And it looks like to me that if we're going to get, we could kind of get an impulse down. I would be looking at, it's pretty clear here, I'd be looking right here. So it's really like 17 points, actually. It's not that far. 29.65 and a quarter, right? Here, here, here. So, that's going to be probably your first possible bounce spot. And then we'll see what that looks like after a bounce. But that could be your first 5 down potentially, and then look for a corrective rally. Again, not trying to say buy it down here, but yeah, you want to see what the put call looks like and everything else. I'm just saying that's a very, very clean level. I mean, it doesn't get much cleaner than that. So I would bet that you get a bounce there. NASDAQ testing its support now, right? We are right on that. So the NASDAQ's got a cleaner channel in the sense that, or cleaner diagonal, I should say, in the sense that off the highs, all those levels are hit, off the lows, all those levels are hit, right? That wasn't the case with the S&P. S&P was a little weaker. right? The S&P never reached the upper channel line. So here you have with the NASDAQ testing its level, again, the futures testing its level. Downside, next possible downside level, simply this low here. And always the 4-hour chart, 200 average on the 4 hours, always a good one to pay attention to. So we'll watch that as well. Look, even the drop that we got in May, like when we got down here, you got a bounce level there too, right? Doesn't look like much, but that's, you know, 110 handle rally in the NASDAQ. So that's where I'd be looking for an initial bounce as well. Look, Euro's up 2 pips today. What a move. The only other charts that I have of interest are really like CAD Yen, which we've been looking at recently. All right, break below here, tag the underside of that median line this morning, looking down towards probably 81.80, and then we'll see. And also actually Euro Kiwi, of all things, is kind of interesting, and here's why. So see the channel here, 2015, 2017, 25 line. That 25 line, big support last year in December of 2018. We kind of rode along it actually earlier this year before breaking below, but then holding on the 200-week average, and now we're getting back close to it again. So I would pay attention to, this is kind of a big zone, but that is the low week close or weekly reversal support as we call it, and that's going to be 164.82. I would kind of pay attention to that spot if you got to it, okay? It's also pretty close to the 786 retrace. Might be 2 legs down as well. Not far. So 64.80 to 65.15 in Euro Kiwi is kind of a spot where we might start to, maybe we start to see Kiwi pull back, or maybe we start to see Euro, you know, trade higher finally, or just, you know, simply Euro Kiwi outperformance. Either way, it's a level that I'm going to be watching moving forward. And that, folks, is pretty much everything for me here. We're in a, this is a dangerous spot for the markets, folks. Let me tell you. Got big divergence with breadth. NASDAQ composite. So before we go, before I close it up, you guys have any questions? Marco wants to look at Euro Yen. You've got it, my friend. Let's take a peek. All right. Okay, Euro Yen. Very clean downtrend, of course, from the 2018 high. I know we've looked at this before, and Pooja says crude, so we'll look at that. I know we've looked at this exact channel. We've been bouncing along the 786 from the flash crash, failing. you're probably near term headed down to 120.15 or so. That's just the 75 line of this channel, right? 25 line was resistance, 75 line was support, notably on 6.3, right? Early June. We are currently 121. So, you know, I'd say 85 pips of downside before you could get a bounce on euro yen. Let's see where you get equal legs down here in this. Hold on. Let's see, we've already got equal legs down on the flash crash, but this is interesting. So equal legs down from the high in 2018 is 120.25. It's pretty much what we just said, right? I said 120.15, but you get the idea. So I actually would pay more attention to this level than one thinks. This is also why, you know, I'm uber bearish dollar yen, right? So like, I don't want this to cloud my judgment on that. Like, I'm not looking for a low at 120.25. I'm just saying it's a spot. Like, you could bounce off that level. It's a well-defined level. Eventually, there's really, you know, there's really not much of a reason to say, you know, get bullish this. I mean, this is a downtrend. So I would pay attention to 120.25, but again, little reason to think that we're not just in a broad downtrend for extended period of time. Until you get something that says otherwise. All right, looking at crude. Sorry, I'm all over the place here, but here's another reason to be bullish, bearish the market generally. You know, VXX, which is the VIX ETF, we just got a daily DeMark countdown buy on that. You know, I have one over here, right? Did have one over here, which was kind of a false signal. We did have one here that was sell off we had in the markets in March, and we just got another one. So another piece of evidence for you to say we're going lower in the markets. All right, let's look at crude oil. And crude's just a disaster. All right. So this is a Schiff fork, okay? So draw from the December 2018 low. We kind of been riding the median line there. All I can offer here in terms of crude is, where did we call it? What's the low week? I want to know what that is. All right, so that is right there. Not far from where we are actually. 54. And what's the 618? 54.50, 52.80. All right. Not a lot of clarity there on levels for me. Let's see if we have anything near term. I mean, it's just a straight down too. Don't have any topside trend lines. So I would look at this. First of all, this thing's in free fall right now, but I just got an alert on the Qs. What's that? This thing's in free fall right now, but 54, okay, is going to be a level to pay attention to for a possible bounce. The move here, though, is if you do get that bounce, 56.80, basically the underside of this line, okay, right here. you could even say between here. I'd say that 56.10 to 56.80. All right. So this zone right here, if you get a bounce over the next couple of days, that is level that you'd want to watch for resistance. And then just see if crude, wants to go lower off it. I mean, look, we don't have to hold this. I know that we held the center line here, but that does not mean that you don't have to go lower. This could be an A, B, and we could be headed lower in a C wave, right? Especially with the momentum we're seeing on the downside. I mean, this isn't exactly like a corrective drop. So you got the 618. 2 equal legs down would be all the way down at 45 bucks. And that is actually not that far from weekly reversal support right there. So that could be where you're going. I really don't need that thing right there. All right, so the biggest level on this, aside from obviously, getting down here towards the lows, but eventually 45 could be where you're headed. And again, resistance 5604, 5680. Also, when it comes to crude, a good kind of like, rule of thumb or something to keep in mind is simply the fact that I actually have it up right now. Crude seasonality, we're in kind of like the negative part of the year. Like the positive part of the year tends to be the first half. Okay. We topped right on the seasonal high point. We're back into another negative kind of seasonal, period. And it's kind of like that through early August. So, that gives you another 1, 2, 3 weeks essentially until you get any sort of relief from a seasonal perspective. And seasonals have worked pretty well with crude this year. So I wouldn't discount that or dismiss it, right? And then once you get into October, then things really start to fall off a cliff, as they did last year, actually. In fact, last year we topped right on the seasonal topping point in October. Pooja says, okay, thanks, not a nice chart considering I live in Dubai. Yeah, I mean, we'll see, Pooja. I'm not going to sit here and tell you that I can predict the future, but, from a seasonal standpoint, we've been following it, market's acting super weak. My whole point is I wouldn't want to try to pick a low or anything or look for a decent low given the price action we have right now until we get into, the first week of August, essentially. That's another one, seasonals, folks. We've got DXY too. Tends to be kind of bearish on a 30-year basis, kind of bearish through October. Shorter term basis, kind of through the third week of August before you get a bounce. Okay. Anything else before I run? Because I do have to get going here. All right, well, I'm going to get this archived then as soon as I can. And thank you all very much for attending as always. I know it's been a while since we've talked, but let's hope that the dollar starts moving, man. I mean, now we've got metals moving, crude's falling apart, but metals are moving, to the top side. So that's a dollar weakness play. Now we just need the currencies to kind of join in a little bit. Starting to see it with yen and commodity currencies. Let's see if euro can join and pound can join after yesterday's reversal. All right, so that's it. Have a great rest of your week, folks, and I'll talk to you next week. All right, bye.